This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Rally fades. Stocks sprint out of the gate, spurred by a rally in China overnight. But then the market's legs turned to lead as fears of slowing global growth trumped the optimism.
New proposals. Greece prepares a new plan for a bailout, but will it satisfy the country's European creditors?
New wrinkle to an old crime. Virtual kidnappings are on the rise. How you can protect yourself and your loved ones in the third part of our series, The Big Business of Ransom. All that and more tonight on Nightly Business Report for Thursday, July 9th.
Good evening, everyone. Thanks for joining us. Drama today on the global stage, from Athens to Beijing, and it was felt back here at home. The ebullient tone here in the U.S. was set early on by China, which barred certain big investors and company insiders from selling listed shares for 6 months. Stocks jumped at the open here in the U.S., but the sharp move higher fell back to earth when concerns over global growth took hold. By the close, the Dow Jones Industrial Average did hold on to a gain of 33 points to finish at 17,548. It had been up as much as 249. NASDAQ rose a dozen, and the S&P added 4. But it was the unusual move in China that sent the Shanghai Composite up nearly 6%, its biggest daily gain in 6 years. Eunice Yoon has more now from Beijing.
The Chinese media is evoking images of a national sports team, saying that the national team is truly taking action. We saw the results of that in the Shanghai market today, which rallied by 6%. The government said it's enlisted state-owned enterprises to stop selling shares. They've also instructed senior corporate managers and major shareholders to refrain from selling shares for the next 6 months. We also learned today that police are investigating what they called malicious short sellers, and they also already have said that they have found at least a dozen institutions as well as some individuals who have engaged in what they call these illegal practices. The investors here were relatively relieved by the rally, but they are still very cautious. Many of them are angry with the government. We saw some protesters in small groups outside of the regulatory office. Many of the investors that we spoke to also said that they are still uncertain of what's going to happen next because more than half of the listed companies in China are still seeing their shares suspended. And so many people here are wondering what's going to happen once those shares resume trade. For Nightly Business Report, I'm Eunice Yoon in Beijing.
The Chinese are now the #1 foreign buyers of U.S. real estate, and that's why a sharp drop in the Chinese stock market over the past month could have a ripple effect on housing here at home. But will it mean a boost or a bust? Diana Olick has more.
From newly built homes in Irvine, California, to brand new condos overlooking Manhattan's skyline, Chinese buyers are pouring billions into the U.S. housing market. Nearly $29 billion in the past year, to be exact, according to the National Association of Realtors. That catapulted the Chinese past the Canadians to the top spot for foreign investment in U.S. real estate. Now, with the Chinese stock market in turmoil, the question is, will that help or hurt U.S. housing?
What we're seeing short term seems to be a flight to safety from the Chinese market. And what that could lead to is even more money being poured into U.S. real estate, which is still viewed as a relatively safe investment, both near term and long term.
East West Property Advisors, a Hong Kong-based company that connects Chinese buyers with U.S. real estate agents, put out a quick survey yesterday on WeChat, a popular Chinese social media platform. Out of 170 responses so far, more than half say they are definitely looking to invest in U.S. housing. Chinese have already been flooding into Southern California and this Irvine development of homes from Lennar, Pulte, and Kehovnanian. The Chinese want security for their cash and great schools for their kids.
I don't think it's a pure investor play, but it's a long-term, I want to live here play.
Some also want to live in Miami, a brand new market for the Chinese. Vanessa Grout had 2 Chinese real estate brokers in her office Wednesday, even as the Chinese stock market seemed in free fall.
The interest has been there for some time now, although certainly with the anxiety that's been caused by the recent economic downturn, we have seen a flood of interest.
Chinese buyers now make up 39% of foreign investment in Manhattan, up from 12% last year. They're not just buying, they're building. This condo overlooking Manhattan is a joint venture between China-based Landsea and Miami-based Lennar. I spoke with Lennar's CEO, Stuart Miller. He said he's not exactly concerned, more watchful. While the real estate here becomes more expensive, he added, it also becomes more desirable. For Nightly Business Report, I'm Diana Olick in Washington.
So could China's big market sell-off create a contagion, spread to other regions, hurt the global economy? Chris Constantinos is Director of International Portfolio Management at Riverfront Investment Group. Chris, welcome. Let me just start with that question. Is what's going on in China, both in terms of the wealth lost and the wealth effect crushed there in China and the slowing of the economy there, is it likely to spread and create a contagion?
Well, Tyler, that's an excellent question. Our view is, for the time being, the answer is probably no. One of the things to keep in mind about the Chinese stock market and its investors there is that if you look at stock holdings as a percentage of total net worth across the average Chinese investor, you'll find that it's a lot different than it is here in developed markets. So whereas in a place like the U.S., stock holdings make up a very significant portion of overall household net worth. In China, it's much lower, somewhere, depending on who you read, somewhere around 10% or maybe a little lower. So yeah, I would be cautious on jumping to too many conclusions that a stock market meltdown is going to create this huge ripple effect. And the other thing, too, is just pull up a chart of some of the most frothy of the Chinese markets, you know, the Chi Next 100 or the A-share market, the local market. And what you'll see is that the recent drop has really only undone about, I don't know, 3 or 4 months worth of gains. This market went hyper parabolic. So a lot of investors, the folks that have been invested for 9, 12 plus months, probably aren't even, you know, in the negative yet. So I think the concern about contagion might be a little bit overblown at this point.
So if China, though, is not done with its correction, and a lot of people think that it is not, if you want a play in Asia, where would you put money to work in Asia?
We vastly prefer Japan, actually. Japan has been, it's a highly controversial market because, as many remember, Japan was one of the worst stock markets in the world from the early 90s until just a few years ago. A lot of wealth was destroyed in Japan, and therefore a lot of investors who remember those times were very loath to ever think about investing in Japan again. But from late 2012 until now, it's actually been one of the world's better stock markets, particularly if you're hedging out the effects of the weak yen. And that's been because there's been a major political changeover and probably just as importantly, a major changeover in central bank behavior there that's caused risk appetite to go up a lot. And stocks are still relatively cheap in our opinion. We still think it's a good value here in 2015.
So very quickly, buy Japan. China, very quickly, too risky to mess with?
I'll do this as quick as I can, but a really important message is that when you talk about Chinese markets, there isn't just one Chinese market.
Right. There's Hong Kong, there's the A-shares.
A myriad of them. And I would tell you that I would continue to avoid the A-share market. Those are the stocks that are mainland China listed. I would avoid anything that's extremely expensive, the high-tech names, the Chinese small-cap names. There does, to me at least, appear to be some value in the Chinese H-share market. So these are mainland Chinese companies that are listed in Hong Kong. These are the shares that are boring and stodgy, the old, the financials, the state-owned enterprises.
Boring can be beautiful.
Yeah, they're not, the fundamentals aren't great, but they're very cheap.
All right, Chris Constantinos with Riverfront Investment Group.
Global growth is set to slow this year. The International Monetary Fund cut its forecast, citing a weaker first quarter in the U.S. The IMF expects the world economy to grow 3.3% this year, less than earlier projections. It also warned that the debt situation in Greece and market turbulence in China is clouding the outlook.
Well, an important day for Greece. As of this evening, that country has submitted new reform proposals to the Eurogroup president, a critical development because what that document says could determine whether that country, Greece, receives a fresh round of much-needed bailout funds and/or debt relief. Michelle Carusa-Cabrera joins us tonight from Athens. Michelle, welcome. Bring us up to date here. Do we know anything about what is or isn't in that document?
We know two things. One, that there appears to have caused a rift in the Greek Prime Minister's party, Syriza. And that would be considered an optimistic sign because if it's got enough concessions in it that part of his extreme left party is upset and leaving and abandoning him, it would suggest there's enough concessions in it or more concessions that means they might be able to come closer to a deal with the creditors. They also say they're going to actually vote on it tomorrow in the Greek parliament. So we're going to know very quickly what's in it. And what that means is they're trying to send a signal to the creditors that they're very serious. They're going to vote on this in advance of Sunday when there's a big meeting to prove that they're willing to do this and can get it done.
Michelle, odds seem to have been changing recently on whether or not Greece will stay in the Eurozone. What are you hearing about that right now?
Well, Reuters continuously surveys economists about their opinions, and just within the last 24 hours, more than 50% of all economists they surveyed believe that Grexit, Greece leaving the Eurozone, was the most likely outcome. So there's a lot riding on this proposal. We wait and see what's in it to see if it reverses everybody's opinions about just how close it could be.
All right, Michelle Caruso-Cabrera following all the action for us as she has been doing in Athens. Thanks, Michelle.
Well, nowhere is there more interest in Greece than in Germany, the Eurozone country to which Greece owes the most money. And German Chancellor Angela Merkel has been one of the most demanding when it comes to those reforms. But what do average Germans think about the situation in Greece? Our cameras were on the streets of Frankfurt.
Germany should support Greece because they need help.
I think it is a good bargain for the future. And so far, I think Germany should help Greece.
I think we have to do that's what we call in Germany Grexit. They have to leave the European Currency Union.
I think it's a shame that Germany had a bailout once after World War II, and now they refuse to give one to Greece.
They should give another bailout, but they should tell the Greece government they have to improve the tax situation.
My personal opinion, no bailout.
And we'll have more on the ground from Germany tomorrow on Nightly Business Report.
Still ahead, one entrepreneur was fed up with his bank, and that led him to do something you won't believe. That story next. There won't be a nuclear deal with Iran by tomorrow. Secretary of State John Kerry said he believes that talks are making some progress, but that real issues remain unresolved and that the U.S. will not sit at the negotiating table forever.
This is not open-ended. President Obama made it very clear to me last night. You can't wait forever for the decision to be made. We know that. If the tough decisions don't get made, we are absolutely prepared to call an end to this process.
The outcome of the talks could have a big impact on oil if sanctions are lifted against Iran and that country's oil hits the market. Today, the price of West Texas crude settled up 2% to $52.78 a barrel.
New applications for U.S. unemployment insurance benefits rose last week to their highest rate since February. The Labor Department says initial claims for state unemployment benefits rose 15,000 to a seasonally adjusted 297,000 for the week. Despite the rise, the level is still considered consistent with an improving labor market, and it marks the 18th consecutive week of new filings below 300,000.
Well, Sue, the more Federal Reserve governors speak, the more it's apparent that there's a real debate inside the Fed over not just when, but whether to raise interest rates at all. The president of the Federal Reserve Bank of Chicago wants to wait until mid-2016 before he considers hiking interest rates. Charles Evans, who's a voting member of the Fed's rate-setting committee this year, says overseas risks have grown over the past month. Separately, Federal Reserve Governor Lyle Brainerd says the central bank is taking a careful look at the global economy.
We are obviously very attentive to risks emanating from the global economy, so we're watching the risks associated with discussions in Greece closely. We're watching developments in China closely. We've also taken note of some recent episodes of very sharp spikes in volatility in some financial markets.
She also said the U.S. economy is more resilient given the changes that have taken place in financial regulations.
Well, the U.S. economy may be more resilient, but according to a new survey, not everyone is optimistic. Steve Leisman has more on who's feeling upbeat and who's beaten down.
American optimism over the economy took a dip in the second quarter, largely the result of concern over rising prices. But the CNBC All-America Economic Survey found the outlook of the wealthy Americans surging. About a quarter of the 800 Americans polled throughout the country believe the economy is excellent or good right now. That's down slightly from the first quarter. There was a similar drop of those who think the economy will improve. The decline comes with reasonably upbeat outlooks for gains in home prices and for wages. That suggests most Americans are worried about the rise in prices, specifically gas prices. But those price increases did not affect the views of the wealthy. Those with incomes of $100,000 or more and big investors were upbeat on everything from expected wage gains to home price increases, underscoring a recurrent economic theme of this expansion. It seems to be sharing most of its benefits on the wealthy.
Over this short-term recovery since the fourth quarter of 2014, most of that positive movement has happened in the upper income brackets and among investors who have more money in the stock market. And what we see on the other side of the scale is, lower income folks and people that may own a house but have lower household income. They are less optimistic, or they basically feel like things are going to be about the same.
The results also show that any extra money Americans have from lower gas prices or from higher incomes goes first to paying down debt, helping explain why Americans are spending less despite having more greenbacks in their wallets. When it comes to fixing the overall economy, neither political party has an edge. Democrats had the advantage in 4 of the 7 issues asked about: the minimum wage, health care costs, and corporate and individual taxes. Republicans were tops in handling business regulation, reducing the deficit, and protecting America's trade interests. For Nightly Business Report, I'm Steve Leisman.
Well, Pepsi hikes its guidance on better than expected results, and that is where we begin tonight's market focus. The beverage and snack giant hiked prices, cut costs. That helped it post results that topped estimates. On that, it raised its earnings forecast for the full year. Still, shares of Pepsi were down today at $94.59. Walgreens Boots Alliance beat on the bottom line on higher prescription drug sales. The company also naming its interim CEO Stefano Pessina as its permanent chief. On top of that, it hiked its dividend to 36 cents a share, raised its earnings outlook for the year, and with all of that, shares popped 4% to $89.55. And Coty and Procter & Gamble sealing a deal today. P&G will sell its portfolio of 43 beauty brands to Coty for nearly $13 billion. Procter says it hopes to structure the sale as a reverse Morris trust. You'll be tested on this later, which is a tax-efficient spinoff. Shares of Procter & Gamble fell a fraction to $80.66. Coty down nearly 5% to $30.04.
Thai Costco saying today that stores open for at least a year saw sales fall in June. A big decline in international same-store sales led the overall decline. The stock was off a few cents to $139.45. Sales at L Brands increased in June, but not as much as analysts were expecting. Its Victoria's Secret brand lagged, while its Bath & Body Works stores exceeded consensus. Shares fell about $2 to $83.92. IBM announcing that it is close to a breakthrough in semiconductor development. Big Blue working on making chips with much smaller circuitry that pack more power than what's currently on the market. Shares rose slightly to $163.85.
So what typically happens when an entrepreneur hits a roadblock? He finds a solution. In this case, a New Hampshire businessman, frustrated when his bank rejected his loan request, decided to open his own bank. Kayla Tausche has more from Bedford, New Hampshire.
On a sleepy strip in Bedford, New Hampshire, there's a new building going up, and to many, it's a post-crisis milestone. It's among the first new banks in the country since the recession. Restaurateur Bill Greiner got the idea for Primary Bank after getting a notice from his previous bank, Citizens, it would not be renewing his commercial loan. Citizens was focusing on bigger loans, more than $20 million, not small business loans like Greiner's. But instead of going to another bank, Greiner went to his Rolodex and then to Washington.
And the regulators were excited with the vision that I gave them, and the vision that I gave them was this would be a grassroots effort. It wasn't going to be 5 or 10 of us, but I was hoping to get 50 people that would come together. That surprised them a little bit, and you could see a couple of them sit back in their chairs, and one particular regulator had said they'd never seen that before, and what was I thinking?
The result? 350 investors, some $30 million in startup capital, and one of the only charters awarded by the FDIC to new banks in the last 5 years. The only other bank that's opened its doors serves the Amish community in Pennsylvania. Demand both for loans themselves and banks to issue them had been pent up. More than 100 community banks started each year, on average, since 1980. But then in 2010, nothing. Low interest rates are partly to blame.
But industry observers chalk it up to tough regulatory hurdles like costly compliance with Dodd-Frank for banks of a certain size, also a required 7-year business plan. They also want to make sure that management and the board have banking experience.
Investors like Matt Kafori understood early on how imperative it is for a bank to not only meet but exceed Washington's expectations.
I'm confident about the future of this bank because the ground has been set. We've been very particular about going to the FDIC, going to the banking regulatory committees, and getting everything, our I's dotted and our T's crossed.
The idea in Bedford generated so much momentum, Griner's CEO found him.
There certainly is a place for the larger bank, but for the smaller customer, I just continue to hear that they wanted more. They wanted something local, and that's really what made my decision.
95% of the money behind primary has come from the state of New Hampshire, including backing from the state's former 4-term governor.
As big banks shrug off small towns, it's a model that many states and entrepreneurs could look to replicate. For Nightly Business Report, I'm Kayla Tausche, Bedford, New Hampshire.
Coming up, how your next plane trip could make you vulnerable to a hack attack. A look at cyber kidnappings when our series, The Big Business of Ransom, continues.
Here's what to watch tomorrow. Fed Chair Janet Yellen will speak on her outlook for the U.S. economy. Closely watch remarks there. And a report on wholesale trade will come out. That is an important economic indicator, and that is what to watch for a Friday.
The New York Stock Exchange issued a detailed explanation of what caused trading to shut down on the floor yesterday. The exchange says it was all due to the rollout of a new software release. There was a problem with the upgrade, which didn't go as planned, and eventually trading was suspended at about 11:30 a.m. Eastern Time for nearly 4 hours. Today, the SEC said it was meeting with the NYSE to further review yesterday's events.
An estimated 22 million people have been affected by data hacks at the Office of Personnel Management. Last month, the government agency said just 4 million had information stolen by cyber thieves. China is reportedly the source of the intrusion, though the country has denied it.
Criminals and kidnappers are becoming more sophisticated. That means they're not just going after people physically, but also virtually. And as the threat from cyber criminals grows, so does the industry that works to combat it. Dina Gosofsky has more on virtual kidnappings in the third part of our series, Held Hostage, The Big Business of Ransom.
The words kidnapping and hostage bring images like these to mind. But the cyber versions of these crimes that turn you and your computer into targets are becoming more pervasive.
Virtual kidnapping refers to a crime.
At a New York City cafe, security expert Joseph Steinberg explains how your next plane trip, for example, could make you vulnerable.
Well, if you were to share on social media that you're about to get on a flight from New York to San Francisco,
Which I have before, not even thinking twice about it.
that would give anybody the knowledge that the odds are pretty good that in the next few hours your loved ones will not be able to reach you.
All right, so I'm shutting off my phone as though I'm getting on a flight.
So they might send a message like this one. It says that you have an emergency situation, your wallet and your phone were stolen and you need someone to quickly send you money.
So I never sent you anything, but the message that came to you from my email has the subject line, urgent, please help.
That's correct. It looks like it came from you, even though it didn't.
But how did they get their contact information?
They've actually hacked an account of yours. In some cases, just looking on Facebook.
There are also hackers who specialize in holding your computer hostage.
One of the forms of technological kidnapping is actually to kidnap your data, or what we call ransomware. And these are pieces of malware that get onto people's computers, they infect the computers, and they encrypt your pictures, your data, your movies, everything. And unless you pay the criminal a certain amount of money, the criminal will delete your files.
But does the person who's sending the ransomware actually have your data, or is it all a trick?
Usually they actually don't have your data. They have a key to decrypt your data. And if you don't pay them, they delete the key, and then your data is basically lost forever.
So they ask you what for your credit card number?
Often it's using Bitcoin.
But if you don't know anything about Bitcoin,
They give you
they give you instructions. Okay, how nice of them. In fact, according to McAfee Labs, ransomware nearly doubled in the first quarter of this year, with criminal enterprises making anywhere from about $8,000 to $10,000 per month in profits as kidnapping, ransom, and extortion become more high-tech. For Nightly Business Report, I'm Dina Gosofsky in New York City.
And to read more about virtual kidnapping, head to our website, nbr.com. Tomorrow, the final part of our series looks at the changing policy of the United States government when it comes to hostage negotiations.
I've had family members who were hit by that ransomware
it's so frightening.
thing where they said, we'll destroy your data unless you pay us within a couple of hours. Very scary.
It really is. All right, well, I look forward to the last installment tomorrow night. And that does it for Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow night.